Boom. We are alive, ladies and gentlemen. Thank you for joining us today. It's Tio with the Arcane Bear. Pretty exciting times. Now, we constantly kind of go over this idea of reiteration or repetition of mantras and the importance of that, especially in forms of pattern recognition and discovery as a multi-decade, multi-instrumentalist. Now, I can say something as ridiculous as that. I'm getting old, it feels like. We really start to look for things that are repeatable and usable for anyone that can spot them. So we're actually going to go over the same thing we've gone over a few times. We've been looking at three peaks in a domed house for quite some time. The main reason here is because this is often an elusive chart pattern because it is a bearish reversal. So it often looks bearish and then it turns around very quickly. So we had gone over this idea that not only is three peaks in the domed house starting from three peaks side, you can actually get an inverse of that, which would be the domed house and the three peaks. And that's what's interesting again about this is that these are actually reversal signals. So we'll go into why that's important next. But just remember, let's start off with this pattern. So what we've been doing in some of the last episodes was going over and looking at different places we could find this. Now, here is our thesis for why we believe this is the case in Bitcoin. So effectively, what you can see is that we could actually go through and we could chart all of this. So this would be good homework for any of you that are interested in learning and going through and doing a fair amount of diligence with each of these kind of hypothesis and theory. But I like to simplify things and not to make it too overly complex. There is a bunch of fundamental data we'll go over next, but these are the areas of interest. So what is really interesting here is this is where the three peaks start. So again, look at the similarity that we start to find. We can actually draw this out pretty much point for point. And then what becomes interesting again here is point 10 and point 28. So the reason being, well, first off, we actually are about to draw in, I believe, the finals of these points. So here, I believe, was our point 10. You could actually even write it to here. So this would be somewhat of a bearish type of signal. And we'll go over a few, again, ideas. We just always remember, it can go a little bit lower here. We could scoop lower. Especially because we have some wicks on these candles here at around 29,000. Now, again, these are like footprints in the wild. You're trying to figure out which one, which footprint is it. So go back to the area chart. Here it is. This is what I believe the three peaks and the domed house looks like for Bitcoin. We had already looked at it for the S&P 500. Again, the three peaks and the domed house. Although this, the three peaks and the domed house here was extended over a multi-year segment because this was a basket of ideas. And I feel here much more confident about really watching the nature of inflation grow effectively. We'd also looked at this last week in the NASDAQ, and if you go to the website here and do some more diligence, you will find that this has actually happened many times in the past. You've got 1893 to 1895, 1910 to 1912, 1946, 1948, 1964 to 1966. They've happened many times in many different markets. And we are actually having some fun conjecture this morning in the private group. So Rafa, one of the private members, had shared this, and this is actually a really great thesis. Now, I'm going to disagree with it ultimately, but I love what he's done here. And this is important. You know, this actually looks often like looks like distribution or maybe even redistribution as he's drawn up to the side. And this is one of the most difficult aspects about an accumulation channel versus a distribution channel is reaccumulation and distribution look almost identical up until the very last sets of phase C, D, and E, and when you get a huge changeover of that as a result. So ultimately, I actually really like this thesis. And then one of the things I brought up, which I thought was interesting, was a bunch of months back, we had all looked at Tesla with you, and we had pointed out this. Because both of these trading ranges here, to me, would have looked like rounded tops, and these would have scared me into thinking that distribution was coming, and that we were about to see a price drop, maybe back as low as like $9 for Tesla. But someone in the private den then just pointed out, hey, wait a second, doesn't that look eerily similar to the three peaks in a domed house? And a matter of fact, it does. Now, again, in the footprint in the wild here, you have points 15 through 20, effectively drawn right here. This would be points 15 through 20, which actually came in a little bit stronger. And again, when you have these things running out in the wild, you're not going to get an exact footprint. So you're looking for the similarities in the breadth. And then here is the most important part, 21, 22, 23, 24, and 25. which you have 21, 22, 23, 24, and 25, this kind of flattened domed house before, again, a return to point 10. So this point 10 is the most important because this is where you get the reversal signal. So point 10 is usually at the very end of these. Point 10, again, with the S&P 500 was even lower right here. Again, you saw an even lower dip in the S&P 500 compared to point 10. And let's actually drop some candles just so we get a bit more depth in this idea, because I think it'll help clarify for the S&P 500. Okay, so here we go. A little bit of candle depth. So even though on basically the bottom of this three peaks in a domed house for the S&P 500, we had a return to point 10 effectively, but we went lower than that, right? So there's no reason to believe that couldn't happen with Bitcoin. Again, this would be something probably pretty scary that could have us slip as low as 20 grand. Now, I'm not betting on that, but either way, what's most exciting about all these is every time you look at the end of point 28, whenever it is found, what you see that follows is a multi-move bull market cycle afterwards, which is what I believe Bitcoin is going to get. Here's the S&P 500 after that three peaks in a domed house reversal pattern. And then again, most interestingly enough, the three peaks in a domed house reversal pattern. Look what happened for Tesla after that as well. I believe that this is what we're going to see for Bitcoin. I believe the next run for Bitcoin is going to be monumental, and we're getting a lot of ringing bells that is the case. Currently, our price is still bouncing very strongly off this VPVR. We have not closed below that once yet. These are very strong indicators. I do believe we hit point 28. Again, it doesn't have to come back as low as point 10. This is a very illiquid market. One of the unique things about Bitcoin is its illiquidity. So it brings us to one of the final parts we like to look at was our Glassnode data. So usually to keep things simple more than anything, because even though there's lots of confluence, I think it can draw out more conclusions than one, which is what we need, just one conclusion, effectively. Still reasons why bullish. So we have this constant decrease of supply in the market, and this is really important. Now, I saw some really great analysis that someone had shared on Twitter. There's some really big holes in RSI that were fitting. Now they compared it to the NASDAQ, and what I thought was fitting there was just the growth. I mean, if you follow our channel, you know already that the inflation of the assets effectively is due to the inflation of the currency supply. They're basically hand in hand. So that it's a pretty simple explanation for what inflation is to the growth of price of everything based off current money supply. Anyways, kind of simple. So we try to keep it that way. So because of this, we don't usually go too far off and look at too many other things. But some of the things we like to look at aside from the balance on exchange, which again looks ultimately like we're seeing a strong bullish divergence between the supply and the price. There was another one we had chalked up and we're looking at. I think it was the 28-day market realized gradient. Yeah, this is kind of a fun one. So again, we're in any scientific discussion. We'll pretend that this is a scientific discussion in some way, shape, or form. You were looking for data that's relevant, and basically allows for noise. So there's a few different ways you can look at how you would select for noise within a statistical experiment. Effectively, I think it's called a shot noise or something in physics. Point of this, what I like about this here is actually not that the price looks like it, because this would be an argument for the price returning to around $24,000. Is that the Bitcoin realized price gain is around 24 grand effectively. That's a positive thing. We know it's actually not too far below us either because we have touched it. But more importantly, I'm actually interested in the amount of a delta gradient that you see coming in, which is like buying and selling, effective volume, period, on the upside and then to the downside. Now, here, as Wyckofians ourselves, what's interesting about this data is we saw a lot of market pressure come in, and we saw almost all of it also then leave. So we're basically at the bottom again in terms of supply. And this is really, really important. This is why when we look at the amount of supply that there is on Bitcoin exchanges and it going down is positive, even though the price will be volatile in this range, the price could drop down to, let's say, $20,000. Again, our thesis here, our main thesis is that after 0.28, we fucking go upwards and fast, right? So that what happened with the S&P 500 after 0.28, we saw a multiple, I think a 5x. With Tesla, it was even crazier. We went from $40 to $1,000. That would be equivalent to Bitcoin going from $40,000 to $60,000 today to $1 million before it stopped to find its next real sitting point. And that's a very real potential when you realize, okay, how does this supply and demand characteristic look over time? And if we know that the financial system is on shaky ground, what does it look like when these gauges start to really break in terms of whose dollar is worth what? Okay, so just a little bit of a hypothesis there. I thought that was really fun. So thanks to both Rafa and Bozzy and Dragon for that conversation in the Bear Den this morning. I had not yet seen this with Tesla, but we did look at this. Those of you who are like really going along with the educational aspect here, you'll remember this one. And this is something I would have considered to be in my early days. If I was in the middle of this trading range here, I would have for sure thought that this was a rising top and that this was bearish. And this is why this is such an important characteristic, and why I think understanding three peaks in a domed house, or its intermediary, the domed house and followed by three peaks effectively, is so important, because these are both reversal patterns. If you are in a bullish uptrend and you see an asset like this setting up, it usually means you should get in and hold on for the ride. At least that's the data that we get from the past. So yeah, thanks for that. I thought it was fun to see that the ones that would have confused me, because I remembered this. I'm like, hey, look, see how this would have been confusing, but it was actually a reaccumulation. Effectively, both of these trading ranges would have confused me. I would have been like, what is happening? If you were trying to actually trade this with any sizable position, like for a leverage trade or something, it could have been catastrophic, especially if you thought like going short here was a good idea, because look what happened to Tesla afterwards, or look at what went to the S&P 500 after 0.28. Again, this 0.28 here with Tesla was not as dramatic as 0.28 for the S&P 500, which was really hallmarked by the collapse of the banking system at that particular moment. Here, for Bitcoin, 0.28 is, I think, a different seat in sentiment. We're dealing with in a liquid market, and if people are just going to keep buying, this baby's just going to keep basically going up. And I think that the bull market that comes next could take us as high as $300,000 to $500,000 before it really stops. So it's a kind of a change in thesis now. Before, we thought we were going to see $100,000 as maybe a top bid. This reversal pattern, the more I look at it, the more I find the repetitions of when it has happened. So good. This is your homework. If you feel like doing it, go out into the markets, look at whatever assets you are interested in. Tesla was the one that we have been following. I know a bunch of you like gold and silver. Look for some type of variation of these three peaks and a domed house. Now, Rafa could be right here. This could be a distribution event, right? It's very clear. But even still, I think we have a marker downwards of around 24 grand, which would just equal part of the spring. So until you get to phase C, D, or E, we don't know. But once we're on the upswing and out of here, we're not going to be going back down this low probably ever. So I think that's a great kind of end to the first part of what I wanted to share today. That stuff was a lot of fun. Three peaks in the domed house. Go try to find where you've seen it in the past and how big the reversals were afterwards. Because again, after 0.28 here, she goes upwards, and usually for an extended period of time. So whether you're looking at the Dow Jones from 1915 to 1957, you're going to find it in there multiple times within multiple different assets. So yeah, try it out, see what you can find. Tesla was the one that we had stumbled on to again this morning, because it was a perfect example of a trading range that looked like it was going to be distribution and then just went batshit crazy afterwards, right? Like imagine if Bitcoin went from $60,000 to, or sorry, from 60 grand to like almost $1 million before it really started to peak out. Well, actually, who knows what Tesla's going to do here? Again, where would you rather be in assets or dollars or commodities? Is a big question about how you manage wealth. But here we try to stay focused with Bitcoin as our guiding light. And I do want to take a quick look here too, because that looks bullish to me, ladies and gentlemen. We now have price result overcoming a supply effect on both directions on the sell side there too. So yeah, ultimately I think we're going to see a reversal here. We could still see a slip downwards, but it's just going to be it's going to be basically one of the world's greatest buying opportunities for anyone who takes advantage of this. Because I'm pretty much 99% convinced now, which is probably overestimated. Let's say 90% convinced now that what we are seeing is a repeat of this 3 peaks and a domed house, and that once that happens, the bull market basically becomes a multi-year extended event that is unlike any of the bull markets Bitcoin has ever had. This will just basically go up, and it just did it in S&P 500 and did it in Tesla. A lot of the bull markets that come after this reversal pattern last some time. And again, it depends, scale with a method like scale and variance. If you're looking at the 15-minute chart, here, these are all daily charts, Bitcoin daily, Tesla daily effectively. So I would say stay above the daily or into the 6 hour, like at minimum kind of 6 hour to find this type of stuff, because you'll find some real data there. So I would stay above 6 hour, and minimum daily is probably the best. Okay, I'll take a look at a few guys' thoughts and questions here. Let's see what the private group had to say. Volume, please. Oh, is the volume a little low? Maybe it is. Check 1 2. Oh yeah, it could be a little bit higher, I guess. You never know with these microphones. You're off to the side 1 second, and okay. So from the Bear Den, what are your top 10 tokens in the 100 market cap, or top 10 coins? It's not really how we invest, although I'm still excited if just to like simplify now the layer 1, or now we'll call layer 0, whatever we can use to get more decentralization working together. Seems like the best route. So layer 1's communicating together, like Solana and Ethereum and Near and Avalanche, all having a chit chat with Bitcoin. Sounds like a great coffee table consensus. So keep it simple for that, but everything else that's exciting is primarily just in the gaming sector for us, because it's a lot less contentious than the L1 and the more critical conversations. And as investors, we feel that having more fun makes sense for the long term, and with how and where and why. But also as the second here, you guys ask, what is the best dollar cost strategies? There is no the best, effectively, and you're asking, how do you time them? You don't. So the best thing to do is to set it up like an internet bill, or like you would go to the gym, right? So if you go to the gym once a week for like an hour, more than just the investing too, it should also come like paired with learning. So when you're making an investment, the more you participate and learn with what it is that you're doing, like using a Uniswap the first time, or like your MetaMask, you should be constantly making small experiments in what you do, so that you know better what it is that you're doing, right? Like you don't get up to go play a show without ever having sat down and played any of the music. You should practice. So because you're dealing potentially with any number of sizes of assets, repetition and the repeat of that process so that you have a system to deal with is a part of what you do on a monthly basis alongside the investing, from starting obviously with things like security, and then moving on to things like playing. How, like should you be going out and playing in the sandbox or the DeFi game, DeFi kingdoms effectively? And the answer is yes. So what does that look like? And set up a routine where your investment is actually paired with participation, because that's where you get the most effect, I think, on the long term. It's not just about the investment. You need conviction on why what you're doing is the smart thing to do. And that the more times you do it and you really get a feel for what you're using, because sometimes it might not always come from a technical level, you'll get a better result, because you'll have had so much time to actually basically use this cryptic technology that we're playing around with. So how many times should you go to the gym every week? Well, it depends what you're trying to accomplish. Once or twice a week is pretty good to keep fit, and over time that adds up. I think if you want to like really put on significant gains, I think the main motive then should be revenue generation. And this is a much better question: is how do I provide value to the community, anyways? So there's a kind of a two-way street there. One of the good ways to look at investments is how do these products and services potentially provide value to the communities around the world or in my neighborhood. And that this is ultimately where we try to focus the energy. So how many times a month you do that is based off your own interests. Sometimes you might spend more time participating than actually investing during that particular time of the week, but it's still part of your monthly, I think, allotted investment schedule. And another question here was, if assets were to drop, would you sway the strategy to buy in heavier? No, technically you should go consistently, but if you see what you believe to be an opportunity, you can increase your size. Sure, why not? Let's, if, for instance, let's just use it as a bill. You're paying for internet every month, and every month you're paying for internet. Your internet starts off at the cheapest plan, but each month you use the internet, you actually start to build more connections, and now half of your business runs on the internet. So upgrading it makes sense. So spending more every month makes sense due to so many other operating functions. I think revenue generation is part of having a well-diversified portfolio. I was just drinking one of the beverages our company makes here. We started that company 10 years ago. I'm so happy it's still plugging around making some. It's one of my favorite drinks. I don't even like the other drinks at the damn grocery store because the one we made is so freaking good. So I think that, again, you're looking for this kind of relationship between the things you like doing, how you generate revenue from that, and then instilling that revenue. Or maybe you don't even like doing it, again, because you could repeat this process with a job at McDonald's and become successful just by executing every month for let's say $100. If you reverse all of this and all you do is just buy $100 of things you find interesting every month for the last 4 or 5 years, you would have done extraordinarily well because the upside potential here is so high. Okay. Yes. Let's take a look. We'll do a few more thoughts and questions here. In your last video, you labeled the current trend as a rising accumulation cylinder. Reaccumulation cylinder is what I said. Well, others are calling it a bear flag. Well, the bear flag group of people don't chart the same as us. We use a totally different methodology. I almost never, in reality, we try not to use things like head and shoulders or rounded tops. We're always looking for what is happening throughout the horizontal trading range and the market dynamics within that trading range. So we would not normally use something, a bull flag, just because they're significantly unreliable as in compare with the traditional trading range. We might look at a bull flag within falling down the breadth of the range or something like this, but ultimately I think they're too short of a time frame to garner our real interest. Let's see here. Should we limit our exposure into, say, 10 or less projects? Yeah, I think ultimately you should be as focused as possible. Well, how focused depends on again, capital inflow. Like in the venture capital space, there's often stories of people having the most conviction about one particular project and really leaning into that. I like to have fun and learn about a bunch of different ideas. So focused, centered, really well-timed investments can do extraordinarily well. And knowing how to recognize that is largely due to recognizing cataclysmic events. If you go back in history here and look at the S&P 500, the moments when it's been down the most is when everyone is scared. When everyone's like, oh my God, it's a bear market. Well, you know what? That's the best time to be in a market now, isn't it? Technically, because then you know that there's so much more room for upside as compared when you're already in the middle of a bull market. Now, it just happens to be the lucky case that with where we are in Bitcoin, just middle of the market, just like we see here with the S&P 500, both the 2001 and the 2008 bear market collapses scared everyone. And a lot of people left the market because they bought high and they're losing value. But again, if you just are effectively accumulating what you know is a good asset, over time, this washes out through to the, well, primarily now we're seeing just due to the inflation of the monetary supply. I mean, one of the things we constantly have gone back and forth about here is if you put the currency stock or the amount of currency supply in the market and you overlay it to the S&P 500, they're basically identical. The S&P 500 has moved up only because of the increase of the supply of currency within the ecosystem. Everything else is just human nature of buying and selling. Look what they're doing. They're going to keep doing this. They can't not, I don't think, right? Anyways, so effectively here, I think part of the idea comes to, look, Bitcoin could just be the only thing you invest in. But if you go into the more niche areas like the play to earn sector, you're dealing with something that's much closer to venture capital. Bitcoin went public in 2020. That was a Bitcoin public offering, basically. So it's not like getting into Bitcoin at $200 anymore, effectively. But there are many opportunities like this that exist because we're still just scratching the surface with the potential of what these technologies can do and what they can do together. Because ultimately we've created what appears to be an economic system that has so much less friction than the old corroded like economic battery and wires that we have lighting our economy to a so much more efficient system that each of the participants are actually rewarded for being there at all. And that's an amazing feat of technology. I really do not think at all we've scratched the surface of where this is going to go over the next bunch of years. Now there's all, so ultimately, if you can be focused enough to just be like, hey, I've got an extra $500,000. It's in the middle of the pandemic. I'm going to invest in Solana right now. That's how you turn $500,000 into almost $500 million or something crazy, right? Those opportunities are rare, but they do exist. And they exist most frequently in extraordinarily high moments of fear. And that's important to remember. This is generally where most of the fun of the thesis starts. If whether it was 2001 or 2008 or 2020 here, if you had started and invested and just basically went long day after day after day, you were in good hands for almost a year and a half. Now, again, from the bottom of the market, you got a lot more room for upside. And this is why buy low and sell high really is the hardest thing to do, is to remember that when everybody's scared of some shit and family members might be dying, this is when the real operators step up and just start accumulating hordes of assets. I think this secondary bull market is probably just starting for Bitcoin. So it's fun. We'll see if we're right or not here, but I think that's every day we get here, we get closer and closer to like, let's say 100% feeling. Where as soon as we get back above $49,000 to $52,000, I think it's going to be clear that the bull market is going to continue to a lot of people, and then it's going to go up, and it's going to go up for a long time afterwards. So we should all be pretty excited. Keep it consistent, and yeah, understand there, I guess, that however you want to diversify should really just be a driver of your interest and participation. To go play in the world of DeFi kingdoms, it's only a few $100. A lot of this stuff is like a few $100. That's how much a video game costs. It's like $200 or something. So I think understanding how we participate with a thesis is just as important as the size of the investments. I think the better understanding you have of how it all works, you're just going to end up with better results. So yeah, whatever's the most interesting. If you find 18 things interesting, do that. But ultimately, no matter what, it will come down to one day as you become more mature in your focus, then it's usually less. Like right now, we're only looking at play to earn video games because we just think it's so exciting. That sounds like the most exciting part for us. So that's where we started to focus. Anyways, we're going to leave it at that. It looks like all the gear is working great. I hope you guys like this thesis. I feel very strongly that this is what we had, and then we're going to have a reversal. Now, again, could be caused to see we hit a $29,000 Bitcoin. It would be happen for a second. And just like we saw here with Tesla or the S&P 500, you do have moments where you, or with the S&P 500, you do have 0.28 that can return down to even below 0.10 here. So again, that would put us, it could put us lower. Afterwards, the moments afterwards are what lead into one of the longest bull markets ever. So it doesn't even really matter. This is just all super exciting. And we're going to leave it at that because it's, remember to subscribe to the channel, give us the thumbs up, all that fun stuff. We appreciate you guys' support. This new computer is way faster. I can't believe I've been running that studio computer for 5 years. That's wild. I guess that's like for the 5-year anniversary of Arcane Bear pretty much as well, which is great. Also, a side point, we did something just for trial and amusement here. We're going to post a few videos. We're going to try this out on a few different channels. So if you want, you can try to find this one first, but we're going to just play around. We are going to post the like video game playing and reviewing, because we've been getting into playing some of these games on a different channel. It's called Play to Earn Games for now. I'm not sure if we'll keep that. I'm not even sure if we're going to keep this box. We're just trying something out. So we're going to try posting a few videos here, see what YouTube does. We're going to probably start a new account after that even as well. Just want to try a few early account things. Bing, thank you for that. And then yeah, we'll start doing our game reviews on a different channel. But we are also going to post one with a review that both Zubin and myself did. So from the Private Bear Den, Zubin is one of our researchers, helps us write some of the amazing content that comes out for the private members, the deep dives into different staking mechanisms and all that fun stuff. So we're going to post that DeFi Kingdoms review here as well. And just see how it goes, because we want to play these video games, but it just doesn't fit the Arcane Bear brand necessarily. I like the conceptual thesis, but if I were to start playing games on this channel too, it'd probably just be too much. So we're gonna try that somewhere else for fun. Anyways, thank you guys for all the support. We will see you again on the next episode. Boom.